Everyone, welcome to my channel. My name is Zach and I am a popular investor with eToro. If I look worse for wear more than the previous videos, it's because it has been a very tough week. Now I know I haven't been around and posting videos, but that's because in times of stress, I tend to focus more on the eToro portfolio than creating these videos. I did, however, update my copies on my wall, just a short text. But here I am, finally ready to sit down and do a video. So the last week has just been absolutely terrible. Let me show you some numbers. So this is my very helpful eToro chart that shows you the performance of the different indexes and asset classes on a scale. So we can see here that I've dropped a lot. In fact, this is about 11% off the portfolio, 12%. And the SPY has also dropped, but not so significant. All has dropped quite a bit, and China, of course, dropped a lot. So what happened last week was a few things. So first of all, we had terrible employment numbers, jumping to 4.3% in the month of July, and this was higher than expected and triggered something called the SARM rule, which everyone's looking at. So the expectation is that once unemployment is higher than a certain level, a recession is likely to happen because more people are out of jobs, there's less spending in the economy, so there's going to be a recession. So this is the first thing that happened. The second thing that happened was a Japanese yen unwind. So what happens is that because the Japanese yen interest rates were so low and the US dollar and assets were much higher, people borrowed Japanese yen and then bought US assets with the Japanese yen. Because the yen was weakening during this time, this became a very profitable trade. Now, specific to one of the asset classes that I invest in, crypto, Jump Crypto unstaked $315 million of ETH, and they were supposedly dumping onto the market, causing Ethereum's price to drop further and faster. And lastly, there was an increase in geopolitical tension because of Hamas and Israel having a conflict. So basically what happened last week was a combination of factors causing the entire market to panic and go into sell-off. We were particularly affected because crypto, mentioned Jump Crypto. Oil also dropped a lot, which is a big part of our portfolio. So what happened as well was we had Daniels come out with their earnings, which is one of our largest positions, and that didn't do so well. Daenerys also came out with their earnings and also did not do so well, and we had a large dollar Swiss franc position which did not do well because of the Japanese yen unwind. So all in all, adding all that together, it looks like our portfolio took a massive dump, and it did. It was really painful last week, and from the time of like Friday till Tuesday, I would say, I didn't really sleep very well, just looking at the markets and trying to figure out what to do. And also why there wasn't a video last week. So it's been an interesting ride, to say the least. Remember, none of this is financial advice. If you do need help, please do seek a financial professional. I don't know your circumstances, and past performance doesn't reflect future outcomes. But taking a good look at our portfolio and having a clear view on it, we can take away a few things. Question is one, did we see it coming? Well, for the Japanese yen unwind, we did. In fact, we had position in CAD Japanese yen, and that helped us make a little bit of money as well. The degree, of course, we didn't expect to be this much, but at the time we took some profits along the way. Bad earnings that came out, I think, are within expectation because if you guys see the way that I do my analysis or valuation of companies, I take a very big discount. So even if they report like 10% under, I still have a fairly wide discount margin so that, I shouldn't be too affected by it, or it doesn't affect my valuations too much. Unfortunately, this doesn't reflect the price. The price can still move depending on how the market feels. So ignoring the factors of, just these stocks and the Japanese yen unwind, what else do we see? Do we think that this is a potential crisis or recession coming up? It didn't look like COVID to me. When COVID happened, of course, the stock market took a tumble, and that's because, everybody's expecting that we're going to shut down and no economic what's going to happen for a few years. But that isn't what it looks like to me. It is likely that we're going to cut rates if there's a recession, and then therefore spending is going to improve, and then we go on our merry way from there. I think that's kind of my base case. It may take a short-term correction, but at the end of the day, we're just going to print money and keep going. Do I think that this is an over-leveraged economy? So this is like something in 2008 where the financial crisis happened because there was too much debt that's servicing the economy. I don't think it's to that degree, because when you look at Japanese issuance, it's only about 2.2 trillion. So assuming half of that is like 1 trillion that's being unwound. While during the Great Financial Crisis in 2008, this was a lot more, like almost 50 times more. So I don't expect the same degree of a financial crisis, especially in this. And to be honest, right now, we don't have any reason to believe it's that systemic. However, what we do see is that the sell-off was quite universal across all asset classes. And the last thing it doesn't look like multiple contraction, which means, for example, the average PE ratio on the S&P 500 may be like 20, 30 or whatever. And is it going to drop to 16? Well, sometimes this happens because market expectations is that there needs to be higher returns in the market, or real returns, like what we saw when interest rates started going up, or anytime like a dot-com bubble burst or 1997 Asian financial crisis burst, and therefore valuations had to return to some kind of mean. We haven't seen that in a very, very long time in the S&P 500. So if it's not multiples, it's not economy, and it's not credit, my view is that this is probably just panic. So even though our portfolio took a big hit, we didn't panic sell because we know that this is just the mood of the market. So as the market fell, what we did was three things. One, we didn't panic. Two, we actually added to our positions that we have conviction in. So what have we done in our portfolio during this time of extreme drawdown or uncertainty? Well, first of all, we didn't panic sell. We kept the positions that we had on hand. Second, we added to positions which we think will rebound pretty quickly. One example is the dollar Swiss franc position, which I was down quite a lot, but added to the position with even more leverage. And the reason why is I don't think this downtrend will continue. And three, we added to some higher beta positions, which means these will probably move up faster as the recovery happens. In crypto, this is, for example, instead of buying more Bitcoin, I bought BNB and Aave instead because I think they're doing really well. And in China, instead of buying more of these government-owned entities, I bought Tencent instead. And this is of course in hopes that the rebound is underway. So with most investment managers actually being on holiday during this period, it's tough to say what's going to happen. I don't imagine a lot of people deploying yet. I do think they want to wait for more economic data to have a little bit more certainty. But in the meantime, we've positioned our portfolio for a very sharp recovery. So you can see that usually I hold around 20% cash. At the time of this recording is around about 5%, so I've reduced it quite a bit. Should the market drop even further, what's going to happen is we're going to take our safer bets, which may not have as much recovery potential, and put them in higher, more volatile assets instead. So the plan is, if the market just continues as per normal, we're just going to keep holding our position. If the market goes up and there is a recovery like how I expect in 1 or 2 months, we're going to sell down our positions as the market recovers. And if the market drops, we are going to sell out of our safer bets and put them into more riskier ones. And when that market recovers, we should recover nicely. But when are we going to recover? The answer is I really don't know. I'm feeling quite a lot of pain from this trade, mainly because I put in more money into eToro and it suddenly dropped. It's like, I couldn't time this as well, and people ask me when's the best time to copy. The answer is I don't know. And this is proof of this because once I put in money, the market dropped and we lost quite a bit. So right now we're feeling a lot of pain, there's no question about it. But remember, this game is played over a very long period of time, and as with any drawdowns, a lot of copiers just leave very quickly. And this is just normal behavior, and I kind of come to expect it. But remember, this game is meant to be played over a very long period of time. Even if you copied me at the worst possible time, which is probably around 2022, you still may have made money in 2023 when we recovered. It's just about having the patience to wait it out. The time I've been with eToro, in fact 8 years, this is actually nothing, right? Because I've had drawdowns in the past, I've had bad performing months in the past, and we've always managed to recover. You can look at my track record. But I know that this is going to be okay in like 2 to 3 years time. It just sucks going through it now. So yeah, just stay safe and be rational about the investments, and let's just keep going ahead. I don't think there's anything much we can do. If you got anything from this video, do subscribe to the channel. If you want to check out more of my stuff on eToro, there's a link in the description below. It's a referral link. And that's actually where you can get the most timely updates from myself about what I'm doing with the portfolio.